Where did the summer go? Hi, everyone. Welcome to the monthly update for September. September update. We're going to tell you what's going on in the real estate news, what's going on in the stock market, Bitcoin, controlling compound. We're going to dig into all of it. I'm Darren Mitchell. Joining me as always, Christina Wyatt. Christina, how you doing?
Hey Darren, I'm doing good. A little disappointed that summer's almost over. We're starting to see those cooler temperatures, but I also love fall, so I'm excited for that.
I love fall, but I just blinked and summer was gone.
Right? It did go by pretty quick.
All right, let's dig into it. Where do you want to start? We usually start with the Bank of Canada. Any exciting news to announce in the Bank of Canada?
No. So not since, we're going to talk a bit about it, but we haven't had an announcement since our last update. So the newest update is coming out on September 4th. So back in July, we did see Bank of Canada cut interest rates by 25 basis points, right? So it's sitting at about it's sitting at 4.5%. So this month, though, StatsCan did release all their information on inflation, which usually gives us an idea of what's going to be happening in that next announcement. So just going through some of that information on inflation, well, our inflation rate actually lowered in July to 2.5%, which is the lowest it's been since March 2021. So on the inflation side of things, it is down from June. It was 2.7%. They're saying that this decrease came from travel costs. So year over year, going into travel season last year with people coming out of COVID, flights were higher, travel tours, airline tickets, all that kind of stuff, accommodation soared. That's kind of leveled itself back out. We've also seen passenger vehicles and electricity decrease year over year. Now, going into the things that most people see on a regular basis, the cost of groceries did rise 2.1%, but that was down from some of the double-digit numbers we were seeing in the last year. So inflation is cooling. We go into shelter, though, that rose by 5.7%, which is high, but down from 6.2% in June. And then rent costs rose 8.5% year over year, while mortgage interest was 21% higher amid the hikes over the last year from 2020 all the way back to 2022, right? So what we're looking at right now is, a lot of people are speculating that we're going to see a decrease in that interest rate come September 4th because that inflation is cooling, and now they're going to need to put more of a focus onto the economy, right? And over in the U.S., they actually we might see an interest rate cut from them as well. They look like they're avoiding a recession, and their year-over-year inflation is down too. So they're speculating that the Federal Reserve is going to do a rate cut in September, and they're speculation that our rate cut could be anywhere between 25 to 50 basis points. So we'll find that out in a few days.
Cool. So a couple comments, and inflation's down, so interest rates should drop. I mean, just the theory is the economy gets too hot, people are buying too many things, and the economy's booming, and inflation's going out of hand. So they increase interest rates. Central bank increases interest rates, and then people stop spending as much money. They stop doing all those things. They stop buying those big purchases. The economy slows down. The trick is not to fall off a cliff. And then, we got to start reducing interest rates before we start getting into that negative growth, because once you get there, it could be months or even years before you bounce back. So it's a fine line, and hopefully they do it. But just one comment on inflation, and I love politicians when they're like, inflation's down 2.5% to 2.5%. I'm like, well, no, like the price of groceries are up 20% in the past couple of years. The rate of inflation is now, it's only going up another 2.5%, but we're not making up the 20% increase that we had in the last couple of years. So,
we're not decreasing.
Yeah.
We're not decreasing.
There's no decreasing
inflation.
back to the way things were. Remember back in the good old days in 2020, 2021, so that's that. And then, so with that, how has that impacted the Canadian dollar?
So I've got some positive news here. Over the last month, we have seen the Canadian dollar raise from 72 to 74 cents. So we are up. That's pretty darn good for us at 74 cents. Much better than it was a month ago when I was traveling in the U.S., but whatever. But that's in part from the interest rate cuts that we're seeing. They're saying they're speculating that we've got a 1.5% rise in GDP. Like everything seems to be getting better, and the U.S. U.S. is not looking like it's going to be in a recession. They're going to take a cut in September as well. They were a bit worried about if they will take cuts and we continue to, if they don't take cuts, we continue to take cuts, that's not going to look great. Well, it seems they're going to probably take a cut in September, which means our dollar is looking better, which is not bad.
Cool. I like it. All right. So I'm going to keep kind of on that inflationary topic we were talking about, and I want to talk about economic news. And I'm going to try to go a whole monthly update without mentioning the decrease in the productivity of the Canadian labor force versus the U.S. But I want to talk about this capital gains inclusion because, again, happened a few months ago, effective in June. But the more you dig into this, I just think the worse and worse it looks. So now, if you're a business owner, your capital gains inclusion rate jumped from 50 to 67%, and if you're an individual, any gain over $250,000 is now at 67% inclusion. So I looked at the stock market from January 2020 to the end of 23. And in that period of time, the stock market increased about 22.6%. Okay, so great run up in the stock market. However, inflation was almost 15% over that period of time. And that's the government numbers for inflation, which I think are totally representative of the actual inflation rate because they're basket of goods thing. So I think it's worse. But let's just assume the government was bang on and the inflation rate is the inflation rate. That means over that period of time, 3-4 years, the net gain was only 8%. So you grew 23%, but you really only made 8% when you account for inflation. Well, what's going to happen with the capital gains inclusion? Well, they're going to tax you on the 23% or two-thirds of the 23%. So by the time you pay tax on two-thirds of the 23%, two-thirds is included in your income. Well, now you're 8%, like you're either breaking even or you're actually losing a little bit of money. You're not even keeping pace with inflation. And that was over an incredible period of growth in the stock market. What's going to happen when the stock market isn't growing that fast and we still have the higher thing? So the last thing on this capital gains inclusion, where the politicians, I think, try to mislead Canadians, is they don't mention how do you invest in something that's going to grow capital gains. I can't tell my employer to just put my full paycheck right into this investment. I have to pay tax. And for a lot of people, especially the business owners or the people paying tax over $250,000 on their capital gains or $250,000 in capital gains, they've already paid 50% tax or more on that money. So, you earn $100,000, the last $100,000 you earn, you pay 50, 52, 53, 54% tax. You're left with 50,000 of the 100,000. You've already given 50,000 to the government in the form of taxes. You go invest the 50,000. Now you make a gain. Most of it's inflation, and now you pay a higher tax or higher capital gains inclusion on that. So it's a tax on a tax on a tax, and that's where I think the politicians are misleading Canadians when they say, "Oh, they should be paying more because they're earning all this money and they're only paying this amount of tax." They've already paid a couple levels of tax to get there. So that's kind of my economic rant. One last thing I want to talk to. Trudeau bounced around this generational fairness. If you hear the word generational fairness, that's just code for we want to tax your homes. All right. So where's the last place they haven't gone after? The principal residence of homes. So it's not an official policy yet, but it's a trial balloon they're throwing out there. And what they're kind of speculating is what they're saying is any home over $1 million, you're going to have to pay tax, additional tax. So if your value of your home is over $1 million, not if you sell it, but if you just continue to live in the same home you've lived in for 30 years. To tax unrealized gains is insane. It is not logical. And you could be and I don't think this will fly because politically it's a disaster waiting to happen. You could have an 80-year-old couple living in Ontario that in 1980 bought their house for $50,000 or $100,000. It's 1,000 square foot bungalow, happens to be in a decent area of Southern Ontario or Toronto, where all the areas are expensive now. Now they're living in a $2 million house. It's still 1,000 square foot bungalow that's 50 or 60 years old. That couple, 80-year-old couple, could be living off $40,000 a year, CPP, OAS, a little savings, and you're going to come into them and say, "Oh, you're rich because you have a $2 million house. We're going to tax you while you're still alive." Uh, I, I think it's crazy, and e- I don't think there's any chance of that. I hope there's no chance of that passing. But I find when people don't speak out about things, people, oh yeah, it's only expensive homes. No, you got to think this through. Who are living in the expensive homes? You've got a lot of retired people on fixed incomes living in the family home, and now they're going to have to pay potentially tax to just continue to live on there on top of the property taxes and all their other stuff. So
Well, and what happens if their $1 million home next year isn't $1 million home? And you've got, like, we're seeing that right now in some of those Ontario areas, is that appreciation's down, like it's down, market's down there. So your house might not be worth the same million. How is that? I just don't know how they're going to do it, is what it looks like. I just hope they don't play the card that it's only going to impact rich people. Only rich people have $1 million homes, right? Like that's crazy. You know that it's going to impact a lot more down the road.
yeah, and it starts out at a million, what do you think it's going to be in another 5 or 10 years? Oh, we'll drop it down to 500,000, or we'll keep it at a million for the next 50 years, while the average house is going to be 5 million, say, in 30 years. Like, it's just ridiculous. Jumping to the stock market, not crazy ups and downs in the stock market the past month. S&P 500 in the States up 2.5%, so they're up 18% year to date. Remember, last month was kind of cool. For the first month I can remember, the Canadian market outperformed the U.S. market in last time we did an update. It didn't this month. It's Canadian market up 1.5%, so Canadian market 11% year to date, U.S. market 18%. And again, exciting couple months coming up. We've got those rate cuts coming up, so it'll be interesting in Canada and the U.S. see what that does to the stock market. And we've got a little presidential election coming up in the U.S., which is always an exciting time for the stock market. So that's the U.S. and Canadian stock markets. What do we get next, Christina?
Bitcoin.
Bitcoin. All right, kind of a flashback. Last month I said, woohoo, Bitcoin was 60,000 and it's up to 70,000. And this month I'm saying, Bitcoin was 70,000. Now it's back down to 60,000. So we had a 10-12% drop in Bitcoin last month. However, still up 35% year to date and about 118% over a 1 year period. And then Robert Kiyosaki, if you're listening, Robert, we love you. We'd love to have you on the podcast. However, his price prediction of Bitcoin hitting $350,000 by August of 2024 didn't come to fruition. It was a prediction. He got it wrong. He still is a huge believer long term, and it's just a matter of time before it hits there. I looked into the next Bitcoin halving. The next Bitcoin halving is 3.5 years away. So March 2028, they're going to be doing a Bitcoin halving. And right now, they've got about 19.7 million Bitcoins mined, that means 1.3 million to go. So there's only 19.7 are gone, 1.3 million to go. So if demand surges, that's the issue, right? You've got a lot of people not wanting to sell and a very limited supply. So that could really spike the price if that comes up. Which brings the last Bitcoin news I want to talk about. Bitcoin had a conference in Nashville a couple months ago. And what I've really found interesting with the conference was there were a lot of government officials there. There were governors, there were senators, there were Congress people, there was a presidential candidate. The politicians, the government people are now going to Bitcoin conferences. And there was actually a proposal put out by one U.S. governor to make Bitcoin part of their literally central reserve, literally be a reserve for the U.S. And the proposal was to buy 1 million Bitcoins and use that as a reserve. Okay, El Salvador already did that. They use Bitcoin as their reserve currency. If we get nation states at a point where, like, especially the U.S., where they would have a policy to literally buy Bitcoin, that's a game changer. I mean, first, any reservation anyone has about buying Bitcoin, whether you're a corporation or an individual, goes away. If the U.S. government is buying it as a reserve, that's what they think of it. But then these are large nations. Don't buy a couple Bitcoins. They would need to buy significant amounts of Bitcoin. And if all the countries in the world are competing and we only have 1 million and some left and nobody's going to want to sell, the price, again, we're not Bitcoin experts. We're not telling you to buy Bitcoin. We do not recommend Bitcoin. We're just saying the potential for Bitcoin, if additional nation states, especially someone large like the United States, does it, I think it's a crazy upside, but do your own due diligence.
Well, yeah, and it gives the point as to why it's included in these updates, right? It is changing the landscape of everything out there on the financial industry and everything out there. So talking about it definitely needs to be had.
Yeah, just
Uh,
one comment on that. I was reading a financial paper the other day, and typically on the ticker at the top, they have the U.S. markets plus whatever for the day, Canadian market, gold, silver, oil, Bitcoin.
Bitcoin. Yeah, I
So
was
now
saying, yeah.
Bitcoin has made the ticker on the top of this financial paper I read, and it's like again, it's just becoming more and more mainstream each month, and it's gonna have its ups and downs, and but it's fun to watch.
Absolutely. So, digging into the real estate market in Canada, we did not see that buying frenzy that people suspected might happen with the interest rate cuts that we saw back, early summer. Didn't quite go exactly as planned on that side of things. If we look at the national home sales, they did decrease. 3.2% decline from the previous year. Now, new listings were up 0.9% month over month. So, this is looking at July numbers, 0.9% month over month. And active listings were actually up 22% year over year. So, things aren't really moving as quickly. There's stuff in the market not moving as quick. And when we look at the real estate market across Canada, it's really a different landscape in each province, right? So, we have the average home price or the benchmark home price for Canadians is 724,800 right now, which is actually down 4% year over year. But if we look at different provinces, they tell different stories. So if you take a look at Ontario, they're saying right now it's a buyer's market, right? We're down 5% this month in appreciation in the average home price in Ontario, which is down 2% annually. BC was also down almost 4%. But you take a look at some of these other provinces, Alberta, you're looking at an 8.6% annual increase. Saskatchewan's actually up 6%, which is Manitoba at 7, New Brunswick at 9. So like these other provinces are still they're seeing those increases, but some of those bigger provinces with the higher priced homes are seeing the decreases, which is leveling out that average home price. So what I want to take a look at when I was looking this up is what do mortgage rates look like right now? Like if we go back to January of this year, if we wanted to do a 1-year fixed, it was 7.89% and a 5-year was 7.04%. I pulled up the rates today, and a 1-year fix is now down to 6.39, and a 5-year fix is around 5%, between 4.5% and 5%, depending on where you go, which is crazy. Like that's a nice little, yeah. And if we see another rate cut in September, maybe we will see some of that buying frenzy that they're talking about. But hopefully people held out and they are now locking in if they were before, didn't lock in. I'm sorry if you locked in January and I just brought up a sore spot because it is getting better out there. It's just nice.
It's funny. My wife was going through files, and we have this impression that interest rates were low forever. And we kept each home we've bought through the years, bought and sold. We've kept all the mortgages and the paperwork. And I looked, the first home I bought in the 90s, I was paying 7 point some percent, and the next one I bought in the 2000s, I was paying 6.35, and you lose sight of for years 6-7% was pretty normal. So getting down to that 4.5% ballpark right now, that's historically that's really low rate. If
Yeah.
you want to compare that to 3 years ago when people were getting 2%, I get it, but if you look at it historically, those are still low rates. Industry news. Fascinated by AI and what it can do, and we've had a couple of cases, life insurance cases, where the approval has come literally within a few hours. Like it's insane that you can apply for a life insurance and get approved that quick. And that's the magic of AI. So all the insurance companies now, most of the insurance companies are using AI to approve the simple cases, right? About 70% of the cases, they need humans involved. But if you're applying for a small, relatively small amount and you're healthy and you answer all the questions, it just it was the bane of our existence for years ago in the insurance industry. Things took so long and they get better and better and better, but now they're literally hours in some cases now. Don't expect hours every time you apply. But I just think it's fascinating to watch what AI is literally transforming the world. But that's our little industry news. That's what it's doing. And then the other thing on the industry news, Christina, we talk about these insurance companies that we use for us, right? We say you have to have at least $1 billion in your whole life for us to want to look at you. You have to have at least a 100-year track record. You have to have never missed a dividend, and that's more the participating fund. But how the insurance companies themselves do financially and how big they are, I think, is relevant because we want to deal with big, successful, long-standing companies, been around for a long time and are going to be around. So Sun Life just released their earnings this month. Their earnings were up 8% to a little over $1 billion. Great West, that's who owns Canada Life, London Life, and Great West. Their earnings were 1.04 billion, up 13%. So it's kind of cool that these large companies are very successful, very profitable. I want my insurance company to be profitable because I want them to be business for the next 100 and 200 years. And then, Christina, you looked at sort of the largest insurance companies in Canada. Now, this does include general insurance companies as well as life insurance, group insurance, everything. And where did the carriers that we use a lot rank?
Yeah, I brought this one up because I found Forbes top 10 for US companies. And I was like, oh, well, is there one for Canada? There wasn't, unfortunately. But I did find the 10 largest insurance companies in Canada. And right on top is Manulife, one of those companies that we work with. Number 2, we've got Great West Life Co. 3's Desjardins, 4's Sun Life. So in that top 5 spot, you've got 3 of those major companies that we're typically using for those high cash value life insurance policies, which is pretty cool. It was neat to see.
Yeah, and Desjardins is in that list, obviously, because they're a huge banking outfit too. So that's where a lot of their assets come, where the other one's more pure life insurance companies. But yeah, they're big, successful companies, been around forever and going to be around forever. All right. What about a little control and compound news? What are we doing?
Yeah, now that we're in the fall, it's like full speed ahead. We've got lots on the go. September, we are at the Keyspire conference. You're going to be sharing the stage with Shaq, Darren, so that's very exciting.
I don't know if we'll go on together, Christina. Maybe he'll open for me. I'll know.
So the Keyspire Investors Summit is September 27th to 29th in Toronto. If you haven't got your tickets yet, make sure you do. This is the first year that Keyspire is actually opening it up to everybody, not just members, which is pretty huge. You don't usually get to do that. So I think that's going to be it's going to be a big event, and I think there'll be a lot of people there for networking, a lot of great information and presenters. So we have that in September, and then rolling into October. Now that we're only a couple months from there too, you're going to be speaking at the Ken Dunn conference, right? That'll be exciting. That's going to be a good one. You're sharing the stage there with Kevin O'Leary. That's cool.
Mr. Wonderful.
Yeah, Mr. Wonderful.
Love him.
And we've got Michelle Romanoff. She's going to be there as well, and Mike Holmes. So those tickets are now on sale. I did see them launch that, so we'll make sure that we include a link below to both the Keyspire Summit, Ken Dunn's conference coming up too, so that we can hopefully see everybody there. Ooh, one other thing that I wanted to mention was the Facebook community. So we've been working really hard on getting in there and talking to. I'm going in there more often. I'm chatting with people, putting comments and whatnot. But we have a Facebook community called Infinite Banking for Real Estate Investors and Business Owners in Canada that we encourage people to join and share their thoughts, share what they're doing on share what they're doing with Infinite Banking, how they're making it work. There's a lot of people out there that want to collaborate with like-minded individuals, and this is a great way to do it. So I encourage those to check it out if you haven't.
Yeah, and just one last thing on control and compound news too. So we're expanding, we're growing, we're looking at new office space, and we're actually looking to hire some additional staff in our operations team. Now that would be a local in Nova Scotia, Halifax or Dartmouth-based location. Our wealth coaches are scattered throughout the country, but we're looking to hire an operations person. So if someone knows a great operations person, let us know. And then podcasts. What do we got for podcasts? Last month, we had a couple of really cool ones. We did Patrick Francie from Rain, and we're actually recorded one to be on his podcast. Patrick's a really neat guy, very successful real estate investor, head of Rain, massive real estate investing group. We did a Nelson Nash, the true cost of acquisition. I like that one. Corporate investment strategies. If you're a business owner and you haven't seen this one, go back right now, watch the corporate investment strategies. And we had 10 myths from your financial advisor. What does everything your financial advisor tell you? Is that the truth, or is some of it a little misleading? And I'm not blaming the advisor. It's just the way they're trained. So that was last month. And then what do we got coming up this month?
So we've got a great lineup for this month. I'm super excited about it. We are starting an accounting series. Yes, with Bob Govro. He has an accounting practice out of Ontario, and we met him at the multifamily conference this past year. We started chatting, and he is a wealth of knowledge on everything accounting, corporate structure. Like, the podcasts that we've got lined up with him are going to be great, especially if you are a business owner. Like, that's where we're kind of going to be putting a focus there with some of those questions, corporate structure, trust, things like that. So that is starting this month. Don't miss it. We also recorded a podcast with a couple of our wealth coaches. So we had Connor Eagleson, Dan Spry in the studio. We recorded that. It's going to be coming out in a week or so here, so you're not going to want to miss that. We had, and then a couple others. We had buy term, invest the difference. So we're sticking with this myths, I think, is where we're gonna. So we kind of broke that.
I thought it made sense.
So you have to listen to it to find out for sure. But we broke down that strategy and, the pros and the cons, mostly cons on that. So you're going to want to check that out. And then we did a podcast all about policy loans. And I think this one is going to be good from an educational perspective for people that are wondering how policy loans work, how collateral loans work, third-party lenders, that kind of stuff. So we dug right into it, went through all of it. So that's something that you're going to want to listen to as well.
All right. Exciting times everywhere. All right. So that's the Control and Compound monthly update for August. Thanks for watching. Thanks for listening. Have an amazing day. Thanks for watching this episode of Control and Compound. Don't forget to subscribe and hit that bell button so you never miss a new episode. And if you're ready to learn more, head to our website, controlandcompound.com. The link's below.